The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 18th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us need to be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. But look, let's get right into these markets. Right now, we're on a pause. Markets have hit limit down. I believe they reopen in about 4 minutes or so. The limit down levels, Dow off 1660, 1,660 points, nearly 8%. To the downside, the S&P 2352 is where it's printed last. It's down 177 points. NASDAQ off 443. The only things on my screen out here really in the green, you got the spot volatility index. So let me get the charts up here so you can see what we're looking at. The spot volatility index is up about $4, 5% to the upside. Cisco is up $1.15, and the U.S. dollar up over $2 right now. And so what that top portion of the chart is communicating to you and I is the so-called flight to quality is in the U.S. dollar. It's not in gold. It's not in bonds. It doesn't matter what currency we look at. It's in terms of all of what the liquidation event that's going on. People are trying to get to dollars. So just think about that. That's what the screens show. That is, in fact, what everything that I take a look at shows out there. And it's important for us to take a look at these markets, step back, look at them objectively. What do they mean? What does it mean to you and I? If we take a look at all of the, or not all, but many of the top countries around the world, if we look at their ETFs, you can do this. What you probably can't do as easily as I can is take a look at how each of those instruments are trading in terms of the currencies out here. But as you take a look at this page, you're going to see what's going on in Germany with regard to its ETF, EWG. You're going to see Japan. You're going to see international large, mid, and small caps. You're going to see emerging markets, Brazil, Hong Kong, Mexico. You're going to see gold, treasury bonds, India, China, Canada, Australia, United Kingdom, the Dow. Sure, there's more countries we could throw in here. I just don't have the wallpaper space to be able to do that. But as you scan down these rows, these columns out here, what do you notice? There's only one instrument that is to the upside. And that's the U.S. dollar index. We're taking a look at the rate of change over the past 7 trading days out there. So it tells us that this is where the flight to quality is. Now, with that being the case out there, my assumptions, of course, that means I could make a out of me, not you, but out of me. But my assumptions are what this is telling us, the global flow of capital is coming into the U.S. And the next thing that it could bleed into would then be U.S. equities. Now, right now, as we speak, even though we went to a limit down, we really are moving towards what I would consider the precipice. We're either going to fall off this area where we're at right now and move to much lower prices. And we'll go take a look at what those much lower prices would be, or we're very near a bottom. Now, what the Sam Heck and Stevie mean about this? And I'm going to share with you what I've shared with subscribers at this stage here. Everybody's got to be on edge. If you're not on edge, man, cool hand Luke out there. And so what I want to do is I want to focus on the charts, the chart patterns, the history out there to assist us with what may be going on and what to look for out there. And so and the only way to do that is for me to just simply be able to pour out to you what it is I'm seeing in my mind, and let's go from there. Because this is the Tiger Nation. So we're all part of this family out here. And my belief is that we're all here to help each other. Of course, that would be my belief no matter what family we belong to. But let's go take a look at what we can learn from history to understand why we may be at or near the so-called precipice. The easy thing to do is to go back and look at history. Now, I just caught the very last piece of Basil's show, but I know he was taking a look at the 1929 monthly candle. This is a quarterly chart that you and I are looking at out here. So I can scrunch. That's a technical term. So I can scrunch all of the historical data where I'm going back to 1896 to begin this chart out here to help us understand what the markets may be doing out here. And on this chart, what we're taking a look at, this is a logarithmic chart. First, you've got to be able to get all the historical data. Then you've got to be able to have a set of tools that will allow you to go from linear to logarithmic. And if you can do that, then you can replicate this chart. But you don't really need to replicate this chart because it's really right here. And what you and I are doing is we're just simply connecting the high in 1929 to really the next swing point high out here, which happened to be in 1966. And voila, what transpired during the 1987 crash was that is exactly where price found support. Now, when I say exactly, folks, I'm not really talking about to the tick out here. Remember that I've got this as a quarterly. I'm not talking right to the tick, but I want you to understand that that line was a key level of support. Now, all I've done on this chart here is simply just all I've simply done here is just replicate that line, only I'm applying it now to the 2000 and the 2007 top. Now, this is a historical chart, so this means it was uploaded as of yesterday's date. I can't have live data coming through this because it's, in essence, it's a made-up symbol called Dow Historical 1896, so I know which set of data it is that I'm using. But I can move this line. You'll see here I haven't changed anything other than just move the line to where it should be reflective now based upon those current highs. So let's simply move. So we are near or maybe near what could be similar to what we saw in 1987. Jay wrote in the Tiger's Den that when we do get a bottom, it could be a buy of a lifetime. And I'm absolutely on board with that. And this may be what, because that 1987, I want you to picture, and I remember exactly where I was that day, but I want you to picture yourself now, understanding what took place in 1987 and applying it to the fact that it may take place again right now. It may take place today. It may take place tomorrow. And we'll take a look at if we have failure, what does that mean and where price is going to. But right now, you should have, or I'd like you to have, just a little bit of a peace of mind, if you can, in anticipation of what could be a bottom. Now, we're going to take a look at what's going to be required in order for that to occur out here. Am I calling this a bottom? Absolutely not. No way is that what I'm doing. Instead, what we're looking at, because we're going to look, we'll see enough signals out there. We'll see higher lows and higher highs and all those types of things out here. And on a buy of a lifetime, should it occur, did you really have to buy the bottom tick? Really? No, I think not. I think not. I know not. Out there. And that's not really what this game is all about here that you and I are playing. So we've got that as a historical reference to understand what's going on. So where else are we? Remember, we use extraordinary tools to help us identify where does price break out, where does price break down. So as we take a look at we're staying with the Dow out here. As we come back and we take a look at the monthly time frame chart for the Dow, what we notice here is 19,677.94 is its breakout area. It just so happens that that is also the low for 2017. Now, we're below that low right now, 19,677.94. We come back from this break. Let's start peeling apart what needs to happen. And we may go just a tad lower. I'll put up my other chart where I believe that that logarithmic trend line gets to. And then what needs to happen to suggest that a bottom is in. Otherwise, we're headed to 17,063. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 1809, S&P 191, NASDAQ 484. So what we're doing here is we began that first segment by getting the historical perspective and certainly some trendline tools that most or very few use out there, and yet we can understand. You and I can, when we use that tool, we can better understand the 1987 crash. Right now, we're in the 2020 coronavirus crash out here, and that's why we're using that same tool. Now, I remember I mentioned 19 here. Let me do this here. I'll go back to the other chart, but I mentioned 677.94 on my other chart that we were looking at, which was the breakout level on a monthly basis. And prices pulling back to a breakout level can be a gift. Of course, closing below the breakout level would suggest you go down to that next area. And that's why I gave you that price projection of 17,063. The numbers are very easy. We just have to watch. Now, on this chart here, so slightly different than the Ninja Trader chart that we had. This is my E-signal chart. And here what I've done is we're on the logarithmic scale. I've attached the 2000 to 2007 high, and you can see right now we're very close to that intersection. So the level, the approximate value of that level, and I'm not don't hold me to the right tick. It's the approximate value is about 19,210, and we're at 19,455, and that's close enough for me. But maybe we get down to that 19,210 now. If this is going to be a bottom, if this is going to be something similar to that 87 bottom out here, what we would see is we would see price in essence test it or tag it, or maybe get just slightly below it, and or maybe just slightly above it. We're in that range. And then what we also need to see is a close back above 19,677.94. If there is one level that I would ask you to put on a pad of paper, it is 19,677.94. And take a look and see where we're at the end of the day. I'd also put down 19,210 or thereabouts, because if that level still holds out here, we still have that possibility of a bottom of that 1987 bottom. It's a possibility. Whereas if we see a close below that logarithmic trend line out here, then really what that could be communicating to you and I is that this move to the downside wants to go to the next level. And the next level here on the Dow would be its breakout area. It becomes very simple. And this is using that TD9 count level, which works so great for us both in helping us to identify support and resistance out here. So that would be the downside, the bearish side of this. What we're looking at is 17,063. The bullish side is we're converging upon levels that should, doesn't mean they will, should hold the support. The cool thing is that if we were to see a close above 19,677.94, then it may have met everything that we were looking for. I say may have met, because then what you and I have to do is we've got to go back and take a look at the daily time frame chart and find some type of bottoming signal for the daily time frame. So what would that be? So as we take a look at the current daily chart for the Dow, just let me hit a quick update button here real quickly. Come on, update it, would you? Oh, what the same heck is going on there? Give me 1 second here. Reload it. So here's where we're at today. It may be hard for you to read. Yesterday was bar 8 of a TD9 count pattern. What you and I know is that if this pattern is to identify a low or high, but in this case here we're talking lows, that low should come on bars 8, 9, today would be bar 9, or tomorrow would be bar 10, or really what I refer to as the bar following 9. So that's one potential bottom signal. By the way, the 1987 crash on a daily basis, the pattern that formed the bottom was a TD9 count. And it was the bar that was following bar number 9. That would mean perhaps tomorrow's low out there. The second pattern that is in play out here right now is the Rhodes Momentum Indicator pattern. So price has stretched itself. Many of the bottoms that have formed, many of the significant bottoms that have formed have been that Rhodes Momentum Indicator bottom. So we've got on the larger picture, the monthly time frame picture out here, using our logarithmic scale, going back to history to be able to help us understand what the markets may be doing out here. What we would then need to see on the daily time frame is confirmation of this pattern. Confirmation would be some type of bullish reversal candle, at a minimum. Now, we've seen several one-hit wonders, one-day Rhodes Momentum Indicator bottom signals that were confirmed with bullish candles, but nothing ever got above Stevie's red line. That is really the key here. So you don't have to, this is the buy of a lifetime. You don't need to jump in today. You don't need to jump in tomorrow. You don't need to jump in on Friday. You need to jump in if, in fact, price can clear Stevie's red line, which right now is priced at 22,469. I know some of you out there could say to yourself, how could you possibly have so much conviction in what you just said? And the only way that I could have that kind of conviction was going back and studying history. Not history, but history of technical patterns and the charts. It's what I do. It's what I've got a passion for. It's what I love. And so I bring that love to you each and every day. Now, not to get too mushy out here, but if we do go back just simply to World War II, this is our World War II chart. I don't mean to keep pushing some of these things on you, but I do want you to help understand that the patterns that I use out here have worked. They worked. They stood the test of time. They stood the test of time. They don't always identify the exact bottom, but the next bottom will form that pattern. I don't know if that makes sense to you. Again, go back to World War II. What should occur out here? What should occur is we should first get the technical signals, the technical bottom. The technical bottom back at for the stock market, which was not the end of World War II. What that means is that today, tomorrow, the next day will not be the end of the coronavirus. But this is the same thing going back to the World War II charts. The bottom came in with the Rhodes Momentum Indicator bottom. If you want to learn that pattern, just sign up for the next 29 days. I don't really care, 15 days or 5 days, but go review. What better time? You're being furloughed for the most part out there. If you want to just understand these technical patterns, just simply go sign up for the newsletter service. Go watch. There's about 6 hours worth of videos. Extraordinarily important out here. And I think they would be helpful to you. But here you had the bullish engulfing candle that identified the bottom. And then what took place about a couple weeks later was the positive event that needs to take place in order for then the markets to be able to move higher out here. So up until that point in time, the Battle of the Coral Sea, it was just really a counter trend rally that was underway. In fact, if you look at this chart out here, you tell me when we knew on a daily basis that this was more than a counter trend rally coming off of that bottom during World War II, down around May. What was it that triggered that? What was it that gave you that confirmation? Exactly. It was a close above 100.60. That was a TD 9-count breakdown level. If this was only had been a counter trend rally, price would have found resistance at that area. So how does this set up? First, we get the bottom signals. First, we come back into those levels out there. It's the 19. What was it? Get it for you. I don't want to misstate it. The 19,210 approximately. We see price get back above the support level, the breakout support of 19,677. That's also back above the 2017 area. The daily time frame chart generates some type of bullish reversal candle out there, confirming the bottom just as it did during World War II, during World War I, during the Korean War, during everything that is out there. This is the way that the market communicates its bottom signal to us from a technical standpoint. Whew. But I really hope this helps you out, folks. I hope this helps you out. If you've got some other eyes and you've seen something else historically that stands a test, I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now's a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 1,900 points, nearly 2,000 points. S&P up 209, and we can see that price is really approaching that trend line area in that 19,210 level. That is that logarithmic trend line. So we need to continue to watch today's action. Let me get to a couple of requests that have come in, and then we'll go back to the charts and continue to surf around out there. But rewatch that first 30 minutes out there, because I think that it should be helpful. I hope that it's extraordinarily helpful to you. It's the best of what I've got. So I'm giving you the best of Steve-O out here. So, and of course I always do that, but really the best that I've got to be able to help assist you and understand what the markets may be doing out there. I can't guarantee what they're going to do. But let's take a look at Pat S. writes in. He says, a while back you gave me a target of 51.75 for Qualcomm. How's that looking in the future? So if we take a look at Qualcomm on a daily basis out here, Pat, similar to the market, stretched to the downside, prices moving lower, doing with less relative energy. If the Dow forms a bottom out here, if the markets form a bottom, well, then so too perhaps would Qualcomm. But at this stage here, you don't have a bottom signal. And really on a daily basis, I don't know what your time frame is. I think it's a long-term time frame, Pat. You really want to be able to see on a daily basis price close above Stevie's red line, 70.09, because that could just simply be a counter trend move out here. And price would really need to go above that, close above that level. Now, where did Stevie, where did our charts come up with 51.75? Well, Pat really told you. He said it was, or he told me, I didn't actually read that part. It's a former breakout level. And here's the former breakout level. This is the weekly time frame chart. Rhodes momentum indicator. Remember, you got to push price down to support. So it's really two price levels out here, Pat. 57.62. You're at 59.30. And 51.75. Those would be the levels to be watching and observing out here. But you're going to have to get the market to bottom too, as opposed to just stepping into this. So I know that makes sense. At this stage here, the 51.75 is certainly still game. And on a monthly basis, that level would be 49.67. So Pat, thanks for writing in. I hope that helps you out with regard to Qualcomm. Doug writes in, and Doug says, hey, Steve, if you have time, well, we're going to make the time for you, Doug. You wrote in. Will you comment on ticker symbol DOCU? So we definitely will. Let's go pull up DOCU out here. And then you've also got CGC. I'm looking to start a position in DOCU and you started a small position in CGC yesterday. Okay, so here we've got, because of the lack of data, what we have to do is we've got to come over and take a look at really the daily time frame. So the question is, what do we see here on a daily time frame? Do I see any bottoming signal? What we see out here, Doug, is we see that price got below two key breakout areas on its daily time frame, 72.20 and 72.78, and so far those levels have acted as resistance. So ticker symbol DOCU is in bar number 9 of a TD9 count, but so far the low of this TD9 count is bar number 5. And so this doesn't really qualify as a bottom signal for me out here on the daily time frame. So I don't have a bottom. I'll take that back. Let me put up the other charts out here. Let me put up the other chart. When I say the other chart that I can go ahead and type in A to B equals C down pattern, DOCU. So give me a second out here to let this populate. So there is a completed pattern. It was the by the D point. It was the A to B equals CD. So let's take a look at that out here. And that is... Give me a second here. My apology. So our A point we're going to start with is going to be, it looks like this high out here from February 19th. Our B point down here, February 27th. The C point out here is on March 5th. And so this makes basically a 1 to 1.618 A to B equals CD. And the reason why that's a confirmed A to B equals CD pattern out here is because of this 3 candle formation referred to as the 3 river morning star pattern. That's the bullish reversal signal. And that is the candle session out here, Doug, from March 11th. Then to March 12th, and then to March 13th. Now, it is the low of that session that should be support. So that is 64.88. So if you're looking to buy this, and I'm not suggesting if you step in very delicately, you're at or near that support level. But if price were to close below 64.88, then the support of that candle formation will have failed, and price will then likely head lower out there. Boy, you need to really be a rocket scientist, Steve, right, to be able to figure that out? Well, Apparently Stevie does. On a weekly time frame chart, is there anything that I can provide for you here, Doug? The level of support out here on a weekly basis, breakout support, is 6206. So I hope that helps you out. Thanks so much for writing in. And folks, if you would like to, if you'd like me to take a look at something for you as well, send me a quick email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, I would love your calls at 877-927-6648. Do we have a caller on the line? We do. We've got Robert in Overland Park, Kansas. Robert, thanks for calling. Thanks for holding. How are you?
Thanks for taking my call, Steve. I think we're all making it. How's that? We're breathing in and out, and the sun's rising, so that's good. Yeah, absolutely. And the water's still blue. That's right. Hey, can you do me a favor and look at TLT? I typically like trading TLT because it's not so erratic. It does a good job trending, but as of late, it's not behaving that way. I'd called in last week and talked to you about shorting it, and I wanted to wait, into this week. And my concern now with shorting it is it's dropped so much. Maybe perhaps I should wait for a bounce. But I just want to get your general sentiment for. And again, I'm not a day trader. I do or what you'd probably call intermediate trades. So, sure. Can you put that lens on your perspective?
Yeah, so, if we take a look at, this chart here, and I'll get to the TBT, but in order for me to do you the proper analysis.
No, TLT.
TLT, I'm sorry, TLT. Okay. I'm so thank you. Thank you for correcting me. So we will go take a look at the TLT, but in order to do that, I really need to understand, or you need to understand, or we all need to understand how our bonds trading, not just in U.S. dollars. Yes, they pulled back in U.S. dollars. That's the left-hand panel of my chart. But what I'm going to share with you is right now support is held. And support would be the bottom of its daily profile. So 169.23. So you're looking to go long the TLT. What I could share with you is on the daily. Oh, you're looking to short it?
I was looking to go. I feel like on the longer term time frame, it's going down. So.
Okay, then what you want to be able to do is try to sell into resistance if you can, versus right now, which is to try to sell support. So support on the TLT is 169.23. Resistance would be the top of its box, and that's 174.21. That happens to be approximately the high of the day. The high of the day is actually 170. What is the high of the day? 174.20. How's that? Missed it by 130 seconds out there, resistance. So that's your real resistance area. To the extent that you were going to sell it, that's what I would be doing. But right now, support is held. If I look at how T-bonds are trading in euros, they're at a lower low. They're at a lower low in terms of T-bonds in yen. And in pounds, that's not the case. They actually made a higher high, a higher new all-time high today. So you don't have all sellers across the board, which is what you want. And maybe a further counter-trend rally will unfold. That 174.21 area is what you'd be looking at. When we come back to this break, I'll go ahead and put the TLT chart on the screen for us to take a look at. We're with Bob in Overland Park, Kansas. Robert, we'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Now we got the Dow of 1741, S&P down 192. We're going to go back to Bob in just a moment here. But what has transpired so far is prices come down and it has hit that logarithmic trend line. And it got to that 19,210 area. And so far it's bouncing. Remember, the level to be watching today is going to be a close above 19,677.94. I would love for this to be a day that lived in infamy, where you and I, deciphered what the markets are doing, and we break the back of this coronavirus. But let's go back out to Robert in Overland Park, Kansas. And so, Robert, I've got the TLT chart up on my screen. And as we take a look at it, the thing that I would really point out to you, and the reason why I defer to the underlying instrument, is because, for example, I was able to share with you that we know that the 30-year Treasury hit and held support being the bottom of its TAS market profile. But when we take a look at that was for the daily time frame. When we take a look at the daily time frame for the TLT, we're below the support level, 155.09. And this would say, okay, support has broken, and you should just simply go ahead and pile on to your short trade of TLT out there. I wouldn't tell you to do that here, knowing that the underlying instrument hasn't done that. And then because you're more of a swingish type trader, intermediate type trader, the 30-year Treasury, now this is a continuous contract here, is getting very close to support as well. And that would be the top, or that would be its oscillator on change line, which is still green and rising. So right now, in my opinion, even though bonds may continue to move lower and get liquidated during this liquidation process out here, I would have a hard time telling you that now would be the time to step in.
Okay, thank you for that. Do you agree in longer term that bonds are going to continue, that the TLT will continue trending down? Or
not necessarily.
Not share that assessment?
No. Here, I'll give you one possible takeout here. So give me a second here to get back to the global flow of capital. And here's what I know.
Big ball of money.
The big ball of money. That's right. The big ball of money, which has to be parked somewhere. Has to be parked somewhere in the world. When I look at this chart, the table out here, this tells me the big ball of money is floating to the U.S. dollar. If it's going to go to the U.S. dollar, look, what else is that you can buy and convert to U.S. dollars? It's bonds. Okay? That's your U.S. dollar instrument.
Okay.
I can envision the U.S. dollar moving higher, Treasury bonds moving higher, gold moving higher, and the U.S. stock market moving higher, all at the same time. All at the same time. With the focus still wanting to be here in the U.S. Now, I may be just totally up. There's a great little move for those of you that are trying to figure out what to do in the evenings. There's no sports or anything. It's a Netflix thing called Schitt's Creek. And it's actually pretty funny. So I could be up Schitt's Creek out here with regard to my thinking. I don't think so. Because when I look at it, the only instruments that's green out here, it's not green on my screen, but it's positive, is U.S. dollar index. So,
coffee.
What's that?
Coffee is too, or not?
I apologize. I couldn't hear you. I don't know what. Robert, could you say that one more time?
Coffee is too, believe it or not.
Yeah, coffee is too. Yeah. Yes, but not as big as the U.S. dollar. That's the big ball of money is looking for the big things out there. But so I hope that helps you out. I really do hope that helps you out. In just the overall thinking. Okay.
All right. Thank you.
You bet. Thanks so much for calling. Be safe. That was Robert in Overland Park, Kansas. Let's go to Orlando, Florida, and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Good. Good afternoon to you, and I hope this ends well. But I'm looking at American Tower Corporation. It seems like it's holding really well. I bought in yesterday at 210.
Give me a second here to pull it up. That ticker symbol is AMT. Is that correct?
Yes.
Okay. So what you like about this today, I'll share with you a level you'd like to see this close above. It's currently trading above it, and that level is 218.49. 218.49 is the bottom of its daily profile. Price managed to close above it yesterday, and that's good. It's trading above it today, so 2 days above that is going to suggest that price would move to 237.62. Well, if you take a look at what today's high is 235.84, so it's close to that 237.62 level. At 237.62 is the center of its daily profile, and at the center of its daily profile, you have both buyers and sellers. That profile level is slightly closer, John, to the top of its box at 251.97. That's really your range of sellers out here. That's the range that price would need to get through. But it looks good. It looks good on the daily because you're above that at least support. You're above the weekly support level, which was 208.57, so that looks good. You're just underneath the top of the monthly profile, which is 221.68. So it looks good. It looks okay. To me out here, which is certainly, if it closes below 218.49 today, it may go back and retest yesterday's low, is the way that I would look at it. The other area, when I pull up the daily time frame chart here, that it really needs to clear, it's called Stevie's red line. And that number right now is printing at 231.07. And yesterday's high ran right into that level, and then it backed off, and it did it again today. And that's a real resistance area. If price can close above that 231.27, that would suggest to me you'd be looking at about the 255.60 area. So it's trying to do everything it can in a really bad market, and I would consider that to be somewhat bullish.
Actually, it's one of the only stocks that's holding up. Compared to the others, taking 50% haircut.
Sure.
This one is holding up pretty good.
Sure.
Okay. Thank you for your analysis.
You're welcome. Thanks so much for calling in. Hopefully we'll hear from you again. That would be a wonderful thing. So let's go back to, let me just see here if there are some comments, some requests that have come in, because if you do spend, okay, so we've got David writes in. Wonderful comments today. Thanks. Indices have hit interesting levels in regards to the ABC Downs. Both these would point to a nice bounce if they hold. Also, some on TV mentioned this week. Okay, David, just really making a comment versus having me take a look at something. Jane, is this Jane? Could you please look at TVX and see if or where you see a top? That's dynamite out there. TVIX, if we put this out here, what did this go to? Somebody was writing in the den, 38 to 1,000 in just a period of a while out here. I don't know what I can do from a technical perspective with regard to TVIX. I can come take a look at the spot volatility index, see if there's anything that we see out here, but there's really nothing that I see. I think with regard to when will the TVIX or the spot volatility index form a top, I think it won't form a top until we see some kind of bottom form out here in the marketplace. And, and we just don't have that. What none of us know right now is this liquidation event that's going on. What's blowing up? What's blowing up that just simply is all out, throw the towel in or what have you. But look, you and I, we're just simply going to come back to this chart right here. Logarithmic scale Dow. Price has hit that target line, 19,677.94. That is the key. A close above that today. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Ruby in the Tiger's Den was asking about the Russell 2000. Here's the daily equity futures contract, Ruby. Today is the bar following bar 9. I can't tell right now if it's a lower low versus from 2 days ago. But if there's a bottom that's going to form out here, that's a pattern that is in play out here. And of course, price would need to close above Stevie's red line. That's currently at 1187. So that would be your counter trend rally move to. And above that would say, okay, we may be out of the woods. So it does have bottoming signals in there on its daily time frame chart. I hope that helps you out. Brent in Martinez, California wanted to take a look at Wynn Resorts. He's been looking at this for a long time out here and just simply asking, is there anything on the left-hand side of the support left-hand side of the chart, that could be possible support. So Brent, I won't put my other charts up there. I can tell you we're below breakout levels for every time frame, daily, weekly, monthly out here. Price is trading below a B point of an A to B equals CD. That looks like that's 49.95 if I grab the correct point, January 16's low out here. And so there could be an A to B equals CD that would take you down to $4.27, which is back below its IPO price, which was $10.76, assuming there are no reverse splits or something along those lines out here. The swing point that it looks like it's targeting is the swing point from back in 29, and that's 23.87 to 14.50. So only if price were to close above 49.95, then it will have held a swing point area out there. But right now, it looks like lower price is where it is headed to. Folks, last piece of information that I suppose we can go take a look at out here before the show ends. This kind of fits into the overall theory of what we looked at today, certainly during those first two segments out there. And that's the New York Stock Exchange daily time frame chart. And the advanced decline oscillator is not making lower lows while price is making lower lows with it. That is how the New York Stock Exchange forms bottoms as well. But folks, right now, it could go either way. And we really need to see the Dow close back above 19,677.94. Have a great Wednesday. Stay tuned for 2 more great hours, and I'll be back with you tomorrow on Terrific Thursday. Take care, folks.
Since 1984, Basil Chapman has been using